Hello, welcome back, America, to another episode of the Market Stretch, where we'll be taking a look at the yoga of investments. This is our once a week check in with the U.S. majors market indexes, starting with the Dow Jones, nicknamed as the Dow 30, started about 140 years ago. We'll be also looking at the S&P 500, which is about half the age of the Dow and makes up 500 of the largest U.S. market cap stocks in the United States, and then finishing off with a wrap up of the Nasdaq 100, which is an index that started in about 1971, and the index itself, the reference for the Nasdaq 100, started in 1984, which is 100 of the largest non-financial stocks in that index, which tends to make it a little bit 6 months and 1 year. Now, this is a check-in for people who don't necessarily be watching the market every day or every minute. It makes them maybe a little bit nervous, but on the other hand, you don't want to be totally forgetting about what's going on in the market and losing track of what you should be perhaps earning and benchmarking your own portfolio against. So today we're going to look at the Dow Jones, which makes up about 20% of the trading volume in the United States stock market for publicly traded companies, and many look at these 30 companies which make up the Dow as a good benchmark for the markets. Most people are benchmarking their earnings as saying that, hey, they should be making 8% a year. Some people saying 4% a year, and some people saying 10% a year. Those are the most common benchmarks that I hear people thinking that they should be earning in the market. How about you? What do you expect your earnings to be, and what would you consider a good market outcome over the last 1 year? Well, let's say we go with the 8% figure, and let's see if the markets are keeping up with most investors' expectations for the year. Let's get into it. The Dow Jones for the 1 day is actually positive, up 0.72%. So what would that mean? Well, let's say you had $100 in the market, and for that 1 day you earned 72 cents. Amazing. For the 5-day, the markets were up 1.19%. Once again, in context, for that $100 investment you might have tracking the stock market index, the Dow Jones, you would have made $1.19. The 1 month in the market was a positive 2.78%. If you had $100 in the market tracking the Dow Jones in the last 1 month, you would have made 2.78%. The 6 month, according to our expectations of perhaps 8%, we have done an amazing 7.92% in just the last 6 months. In the 1 year, would you believe it, we made 20.63%. So according to many or most people's expectations, we could say that it has made about 2.5 years worth of interest or appreciation according to what we normally expect it to do using the 1 year standard of 8%. So if you had $100 in the market, you would have made $20.63. Amazing. All right, let's go ahead and take a look at the next index, which is the S&P 500, which originated in the 50s, maybe around 1956 or 57, somewhere in that range. And let's see what happened with the S&P 500 in the last 1 day was up 0.22%. If you had $100, that would have been 22 cents. 5 days, it was up 1.49, so $1.49. In the 1 month, 5.15%. Woohoo! All right, now we're talking. For $100 in the market, you would have made $5.15. Not too bad. For the 6 month, the S&P was up an amazing 11.26%. So if you were in the S&P 500 for the last 6 months, you would have made $11.26. If you had $100,000 in the market, you would have made $11,260. Okay, drum roll please. The 1 year in the S&P 500, an incredible 7.6 7%, almost 3.5 years of appreciation if you consider 8% to be normal. Imagine if you had $1 million, as Dr. Evil likes to obsess about, in the market in the last 1 year. You could have made $277,000. Not a bad way to make money. Hey, let's just work on getting that first million in the market, and maybe we can start to let the market work for us. The next index we're going to look at is the Nasdaq 100, and we're going to be taking a look at how these 100 stocks on the second largest index next to the largest one in America, which is the New York Stock Exchange, the Nasdaq 100, is doing. Remember, this is the largest 100 stocks in the Nasdaq, excluding the financial stocks. So with that vacuum created by removing the investment stocks or banking stocks, financial stocks, it tends to get filled up, especially nowadays, more with the technology stocks. So let's go ahead and take a look at what we're seeing out there in the 1 day, up 0.36%. If you had $100, you would have made an amazing 36 cents in 1 day just for keeping your market parked in an index fund. The 5 days could have been up 2.91%, so $2.91 for the 1 month. Whoa, would you believe it? The Nasdaq 100 up 10.49%, more than a year's worth of appreciation. It packed about 1.25 years worth of appreciation in just 1 month. Amazing. Let's take a look at the 6 month. In the 6 month, the Nasdaq 100 has been up 19.69%, almost 2.5 years of appreciation if you consider 8% to be normal, which that would bring us to 20%. Nasdaq 100 is just at 19.69%. If you would have had $100,000 in the market, that means you would have made $19,690 just by sitting basically on your hands with your money invested in the stock market for the last 6 months, parked in an index fund that tracks the Nasdaq 100, index funds such as QQQ, if you heard of that one. The next one we're going to look at is the 1 year. In the 1 year, drum roll please, celebration, amazing jubilation, an incredible 41.14%. If you had $1 million in the stock market, as Dr. Evil would like to say, you would have been up an amazing $411,400. Hey people, let's just work on getting that first million invested in the market, and maybe we can let the stock market do some of the work for us. What do you think? All right, we've had an incredible run on the market, about 5 years worth of appreciation in the 1 year, according to the Nasdaq 100, if you would have been invested in one of those index funds such as QQQ, and you could have made that in the Nasdaq 100. What's driving the market, you might ask? Well, amidst uncertainty with things such as the war in Iran, AI, you've heard of AI? AI has been driving the markets. In fact, some of the processors and servers that are working with AI seem to have been some of the big market drivers. A company called Micron, you might have heard of Micron, they actually hit the 1 trillion market cap for the first time as the stock surged 19% earlier in the week. Okay, Micron topped a 1 trillion market value for the first time on Tuesday as shares popped 19%, driven by insatiable artificial intelligence demand for its memory chips. The stock surge came as UBS tripled its price target on the stock from $535 to $1,625 a share, citing a long-term agreement opportunities with partially fixed pricing. Okay, so amazing progress in the artificial intelligence markets. We'll see how long that holds up. All right, Iran is citing that the U.S. is not abiding by its treaties to keep a ceasefire. In fact, on Tuesday, Iran accused the United States of a clear violation of the ceasefire between the two countries after the U.S. launched what it called defensive strikes that threatened to disrupt intensifying talks to end the war. So sounds like what I understand is perhaps there were ships being fired upon in the Strait of Hormuz, and the U.S. took countermeasures to protect the ships, is what I understand. So if you want to check that out, what's happening in the Strait of Hormuz, you might want to check that out. I did notice that gas prices seem to fall significantly this month. The last time I looked at it, you were down under the $6. They fallen about $6.50 to $5.75 at some of the local gas stations. You might have noticed that if you're in California. The other thing, deal or no deal, Trump is posting confusing messages on social media. The president posted that a peace deal with Iran would be announced shortly and that a deal was largely negotiated. And then to everyone's surprise, he then posted, well, it wasn't even fully negotiated yet, and we're just waiting, taking our time. We're in no hurry to get a good deal, amongst threats of wanting to bomb Iran back to the Stone Age, and then we've got time and different things like this. So anyways, it looks like we're serious about sticking in there and doing something in the Strait of Hormuz, but yet not quite ready to pull our triggers on full annihilation, or to perhaps just wait it out and see what happens. I think waiting it out, giving it some time, there might be quite a bit of wisdom in that, and hopefully less harm, less casualties, less people dying with that type of attitude. So let's see what happens. I do hope that Trump is successful and negotiates for a denuclearization deal with Iran. Wouldn't that be wonderful? Okay, core inflation is up a little bit. It hit 3.3% according to the Commerce Department. So that's the core price of the PCE in April rose 0.2% and 3.3% for the year, against estimates of 0.3% and 3.3%. Looks like it's just about on track with what they estimated it would be. I don't know about you, but sometimes I wonder how accurate these numbers are. It seems like inflation might have been quite a bit more, at least in some areas, for most of us. About the only thing that seems like it's been relatively flat has been some of the housing prices. So that may have accounted for some of it, but it seems like most everything else continues to go up at a rate, for me, that does seem a lot higher than 3.3%. Let me know what you think. Feel free to comment down below if you'd like to. All right, talking about AI again, one of the drivers in the market, an amazing stock jump was for Dell. Dude, stock skyrocket 32% for its best day ever as the AI server revenue soars. So how much did it soar? Well, actually, the server revenue increased over 757%, almost 8 times from what it was last year. So that's a little bit of the weekly wrap up. I hope you enjoyed the little stretch with the yoga of investment this week. Taking it easy with you, keeping our eyes on the market, not quite obsessing about it, but trying to keep in the loop of what's going on every week with the market stretch. All right, I hope you enjoyed this week's market stretch. Looking forward to seeing you in the next one. Take care. Goodbye. God bless.
Follow, message us, or scan the QR code on the screen to learn more.